Yesterday, we had a sell-off and a rally, and it looked like we could have a second leg down. There we gapped down in the area of a leg 1 equals leg 2 move, and also in an area of the measured move from that last leg of yesterday. First bar of the day today is a doji bar, which is a trading range bar, and it's followed up by a second doji bar, and then a third. To me, that significantly increases the chances that today will be some kind of trading range day, or we'll have a lot of trading range activity. Sometimes the market has a spike up or down and then enters the trading range. But those three bars tell me that the market has a lack of conviction. It may have that for the rest of the day. As I said, I wouldn't sell below 3. I thought that there would be buyers there. Since we're in a small trading range, and there were. 4 went outside up, so that means it could be a bull trend day, but it's not a very impressive looking bull trend bar. Today, because we're a gap down day and the clock is ticking on the 60-minute and daily charts, and we could have a huge day, especially in the final week of the month. You always have to be thinking about that. Bar 5, the bear reversal bar, I think is a good setup for a short, even though at the moment always in is down. We had the report coming. 6 is a breakout pullback from the double bottom pullback. 2 and 4 are a double bottom. 5 is an inside, 5 is a little pullback. 6 is an inside bar, which is a pullback. So that's a setup for a long. So, 2, 3, 4, 5 is a bear flag. And instead of breaking to the downside, it broke to the upside on 7. But there's a problem with 7. The 5-tick tail on the top is not what you see in strong bull trend days. So we've had several things today that are not typical of strong bull trend days. The first 3 bars, the outside up bar with the tail on top and the body not too large. 5, the bear bar. 7, the breakout bar with the tail. 8 and 9 doji bars. This is not the way really strong trend days behave. So I think we are going to be in some kind of a trading range. 8 and 9 are an II. The market may close the gap below yesterday's low, may go up to test yesterday's close. Another attempt to break out at 10, but then the same problem that we've had earlier. 11, a small bar. Where's the follow through? Why can't the market generate a couple back-to-back very strong bull trend days like it does on most trend days? And it's because today's probably not going to be a strong bull trend day. Yes, we have a spike going on here, but there's a lot of trading range behavior so far today, so we have to assume that the day is telling us that it's going to have a lot of two-sided trading. In other words, trading range price action. This is arguably the third push-up on the day. 1, 7, and 11. 12 is a bear outside down bar. And as you know, in general, if I'm shorting counter trend, I want to short below a bear bar. If I'm buying against a trend, I'd rather buy above a bull trend bar. I shorted above. I did not short below 12. I probably should have, but I didn't. I did not because from 4 on up, we had about 8 bars or so with every bar having a low at or above the low of the prior bar. So it's too tight a channel. I'd rather short a lower high. 16 is interesting. The pullback is deeper than I would like to see on a strong bull trend day. Plus, it went below the bar 10 low, and so you don't want to see that on a strong bull trend day. But it's the first pullback from the channel, so it's a possible buy. I think it's risky because of the 4 down bars, 3 of them being bear bars, but the market didn't care. Possible lower high or a double top at 19. The bar is fairly large and it has a tail in the bottom, so it's forcing traders to short fairly low down, which is not great. Trading range is unfolding. A lower low by 1 tick on 21, with a decent bull reversal bar. It's following 2 strong bear bars down, 1920. It's a high 2 long. I think it's not great, but I think none of the trading is going to be great today because of the trading range price action. Okay, 3 decent bars in a row here, 21, 22, 23. but trading range day. Trading range day means that it goes below lows, it goes above highs, and then pulls back. This is a good enough spike so that I think there's probably a 60% chance that the high of the day is not in, that we'll get a pullback. Pretty good chance we'll get a measured move up. I'm not shorting below this. This is the strongest spike of the day. So even though it's a one-tick new high and a possible failed breakout at the top of a trading range and a bear inside bar closing on its low, I think it's a risky short. But if it's going to be a high one long, I don't want to see it coming down 4 bars. I'd rather have it see it be 1 bar, the bear inside bar, and then a breakout below it, and the bar become a bull trend bar. And if that happened, I would have held for a swing up to 86. But that's not what happened. We traded down, and a couple problems with the sell-off. Well, 3 problems. First, 4 bars, no bull bars. Second, it came to within a tick of the breakout, the strong breakout bar, the 23 low. And normally, if it gets that close, it goes below it. And then my most important red flag was the one I talked about a lot today. 21 is clearly a strong setup, and always in. If you didn't think of always in long at 4 or 6 or 7 or 10, you had to think of always in long on 22, 23. And here we are coming down, testing above the 21 signal bar, the start of the always in long, or the clearest always in long. And the market missed the high of the bar by 3 ticks. That means it missed break-even stops by 2 ticks. And that's not what typically happens in good breakout tests. Normally, it comes down to within 2 ticks of the signal bar and misses the break-even stop by a tick, or it hits the break-even stop, or it even goes a tick or 2 below. So the market turning up here, to me, is a problem. And I think it will come back and get those break-even stops. Anyway, that's 27 is the breakout pullback long. I wouldn't short the double top at 31 because of the doji. I think there would be buyers below. I wouldn't buy the breakout pullback at 32 because it's not a really strong day and we just had a doji. So I think there will be sellers above. Okay, now we have another 1-tick high, possible high of the day, although I don't think so. Anyway, it's a wedge top. The wedge has gone on for a couple hours, so the pullback should go on for at least an hour, and it should have at least 10 bars. So I think that's an acceptable short with the stop above the high. 33 is 1 tick above 23, and 23 is 1 tick above 12. So when you have that 1 tick breakout of a 1 tick breakout, it's a wedge. This overall pattern has a decent wedge shape. If the market goes above here, it probably will go up for a measured move. Anyway, I would not buy above 35. I think the market's on a short, and it should have 2 legs down. And that means it'll have a leg down, probably in a channel, and then a pullback, and then a second leg down. So the one thing I'm most confident of is we'll have 1 leg down and then another leg down. So I think it's good to short below 34 and then short a lower high or a double top. 40, I think, is interesting. I still think the market's going to go below 28 and hit the break-even stops at a minimum. 40, you can argue it's 3 little pushes down, a little wedge bull flag, and a possible buy. But I think we should not go above the 34 top of the wedge. I had a buy stop in to go long, a small position, just in case it went up there. But it did not. It did go up higher than I thought, though. It double topped. Sometimes wedges have perfect double tops. On the spider, by the way, it went bar 46 went 1 tick above the 33 high.